If you open any trade journal today, you see the headlines: retail media, commerce media, different terms denoting often a very similar or the same thing as the next frontier in digital advertising. If you look at some of the big consulting groups, the McKinseys and the BCGs, they've already made a large business out of this and saying it is the next revolution, the third revolution of digital advertising. But what's behind this? What's behind the buzzwords? What is this market? How can we understand it? This is what I wanted to speak about today a little bit, because it's a very peculiar, it's a very weird market. It's growing fast. We got massive players in this. We got e-com players in that, last mile delivery companies. We got supermarkets. We got pharmacy chains. We got DIY stores in it. All these different things. But it's peculiar because it's a market that is already in the US and in Europe attracting a lot of spend. But it's also a very immature market. There are no standards, no definitions. We're now in IAB Europe and UK and in Germany just releasing first definitions on a market which already, depending how you slice it, is a couple of billions worth, and we don't even know how to define it. So that's quite an interesting thing. We ended the last presentation on one of the key growth areas, which was retail media, and I wanted to pick up here. We're not going to do an ad spend study on retail media for the MENA region just yet. What I want to do today is present some of the research we did in the broader European context to understand what is retail media, what are the drivers, how is it structured, and how does it need to evolve to really fulfill its potential, to really come into the stage of adolescence. I'm going to close with a little thought experiment to see, well, is there anything we can see how big it could be or could become in the MENA region? Purely hypothetical, but this is what I would like to close on. First, let's see how can we frame this stuff. What is this retail media thing really? And what's behind driving it? And I think despite this massive growth that we saw in the region, if you look at all the structural challenges, ATT, cookie deprecation, for many marketers actually, 2023 looks a bit like this. Sebastian in the audience, he probably knows this. It looks like a Dutch bicycle race. And this isn't just any bicycle race. There you are. You know the Dutch Headwind Championship. You go on this little grandma bike, and was it tegenwind fietsen or something you call it, right? And whenever there's gale force 7, you go on this bike and you cycle, and who wins the fastest against these headwinds is the winner of the year. And I think we have this. We got heavy things to lift and do in our industry, and there are all these headwinds because it's changing. The good news is it's moving ahead. We're not static. But this is what many feel like. And we had, after the COVID-induced boom of e-commerce, I think in many periods of the world, a short deflation, where in a sense, did consumers overspend on e-commerce? Many said we had this period of, four-year growth in 3 months, etc. And indeed, here's some UK data to contextualize this. E-com growth, people bought online, was growing in a fairly linear manner, some cyclical blips here always end of the year. And then we saw this massive exponential explosion when COVID happened. But then there was a reversion to the mean. Growth dipped back down again. The good news is now we're seeing it pick up again, and not necessarily in a linear manner, but again in an exponential manner. And this is a good foundation for the continued growth of retail media. But what really is retail media? There's an evolving and complex definition, and I try to, on this not very pretty chart, show this in a sense. So some call shopper media, some call retail media, etc. Shopper media, marketing to shoppers, so not consumers, but people who already want to buy stuff, is a core component of it, but it's not everything. Retail media, ads on retailer sites, on e-commerce sites, etc. And it can also be extended to third-party off-platform media if you use the data from retailers to target ads. So it's not just shopper media. E-com spend is coming in, brand spend is coming in. We see it broadly as media bought directly from a retail media network or from a .com team here. 3 key characteristics: proprietary first-party data, that elusive first-party data that, Mohammed, you mentioned on the last panel. on and off-site inventory opportunities, and also the holy grail, hopefully, closed loop attribution. You can really see, did you see the ad, did you buy something, what's the action measured in a single platform. Where's this money coming from? It's not necessarily money that is already in the digital ad ecosystem. A lot of that money is offline, and it isn't even considered as advertising money. It's trade marketing, a completely different universe with different skills. Often digital marketers and trade marketers don't speak the same language. It's like a Babylonic tower. We can see a few things in the US right here, how it's happening. This is the US retail media market right now. This is how it's going to grow in billions up to 2026. And you can see the different growth drivers in here in terms of pots of money where this stuff is coming from. Organic growth in digital, clearly, something's coming from here. There's going to be a reallocation from other digital channels, in particular as we're looking for more measurable, performance-based environments. Shift from traditional media, we can see it. Some shifts from like bottom of the funnel, like performance-based television, for instance, from other news media. But also fundamentally shift in trade, where these offline end caps, you know, the kind of product promotions you see in the supermarkets, that stuff is slowly moving online. It could be faster. It's not that fast because there's competition, push and pull. Who's responsible? The trade marketing team, the digital team, a lot of streamlining needs to happen. And then there's also sponsorships, events, and so forth. You can see it's a lot of different pools of money that fuel this. This is in a mature market like the US, where you got, you know, beyond Amazon, you got the Walmarts, the Targets, the Albertsons, the big supermarkets. But in Europe and other markets, it's fundamentally coming now from a shift in trade that we're seeing. That's the biggest pot of money, probably 70, 80%, depending on the market where it's coming from. This is quite interesting because that means it's net new money that has never been defined as advertising and has never been defined as digital. There are a few things fueling this, and one of the core things actually is the change in the privacy landscape. I don't know whether anyone is from Sweden in this room, but this is the Stockholm telephone tower at the beginning of the 20th century. And you can see this ugly construction here. These are all wires going to every single housing block. Right? So you could see, in a sense, the communications infrastructure visualized. And there was a problem for many people back then, because there was one phone line per housing block. When you picked up the phone, you could hear your neighbor on the phone. And you could listen into all those conversations. And there was a magazine, like the Wired magazine of the 19th century, called The American Electrician, because in New York, they had the same problem, just not this beautiful tower here. And the quote here is quite remarkable. The quote from 1897, complaining about the privacy intrusion of the telephone, says, "We shall soon be nothing but transparent heaps of jelly to one another." Couldn't this have been said yesterday by a privacy critic of our industry? So every epoch had this push and pull between technological evolution and privacy. But we're seeing it now completely re-architecting the foundations of our industry. And this is an area, of course, where retail media plays in, because you don't need necessarily to send data through the web, through leaky containers, etc. Because the future of all of this is going to happen on a spectrum here. There's not going to be one single replacement to third-party cookies. There's going to be, I call it, a spectrum of identifiability, where you have here logged-in users on platforms, on commerce players, on the social platforms, on retailers, publisher ID segments, and then you move away from individuals already to groups, to topics, to Fledge, etc. And then in the end, of course, contextual data, which often is not about people at all, but just about the editorial environment or time of day that an ad happens in. And of course, this here is hard to get, but it's a holy grail for many, because you can do a lot of things in there and improve the value of your advertising. So there's a race to first-party data and to logged-in individuals. Now, first-party data, as important as it may be, is actually very hard to do. So if you look at different sectors, this is here data from Europe, where we looked at what's the relative contribution of different sectors to digital ad spend. You can see them ranked here, and I put a smiley next to each sector. And the smiley says happy, sad, neutral, how close each sector typically is to the end customer. The closer you are to the end customer as an advertiser, the easier it is for you to build first-party data assets. But you can see many do not have that proximity to the customer because they don't sell directly, they sell through somebody else. And even if you had that first-party data, is it really in the purview of the CMO to get that data? It's often non-advertising data, and you have to speak to other people in the organization to use that precious data now for marketing. So huge headwinds to actually make first-party data work at scale. At the same time, how do we activate this data? We are not in a coherent single internet anymore, but increasingly what I would call a splinternet, a fragmented, a sharded internet, a plurality of internets. We see as first-party data becomes so important, at measurement and attribution within the single platform, we see a closing off. Now, walls and hedges are being put up. So we have different internets that are often not compatible when it comes to the sharing of the data, etc. Right? And even this so-called open web is not a holistic thing anymore. We've got the ID web, the anonymous web, we got the AI-based fledged topics web, etc. It's all fragmenting. And in this world, we see more and more gardens emerge, sometimes more open, sometimes more closed. Retail media is key of that because they have large scale, they have the ad exposure, and also they have the measurement and the conversion in a single platform. And everybody who has this tries to build their own thing. The analyst Eric Seufert, who some of you may know, says today everything is an ad network. When you have first-party data and you have some kind of conversion, you can build something. And now even Marriott Hotels has its own retail media network, to be honest. So there are a lot of macro factors driving this rush to retail media, not just the digitization of retail overall. And with this, we can see some emerging shifts happening in the ad market. Again, this is a European perspective, not reflective of this region, but I show you some of these structural shifts. If you dig into company results globally, you can see quite interesting that partly growth drivers are coming from new types of companies that haven't been there before, who are very close to the point of purchase and a transaction. And retail media, these divisions here, they're growing quite quickly. So here are a few, not my data, but self-reported data from companies operating in this space, where they are today and where they expect to be in the next couple of years. For Walmart, it's already a multi-billion-dollar business, and they have now exceeded this 2.1. They want to get to 4 billion in 2024. Instacart, a huge player in this last-mile delivery business. Uber as well, with Uber Eats, kind of clear retail media, but then also with overall Uber, with recommendations while you're using the Drive app. eBay, Target. In Europe, two players, we have your Carrefour, one of the largest supermarket chains, and Zalando, e-com player from Germany, who already makes some money. It's smaller, but you can see it's coming with a delay to become more sizable. So there's huge growth happening here. And recently we saw the latest release from Uber, who said they already had last year a 500 million run rate, i.e. spend running through the platform, which could be classified as retail media. Big money is at stake here. This means globally, in a sense, we see a shift in power, where you can see that are new players. This is kind of a ranking of top companies globally in the Western world, ex-China, in terms of pure play digital players. You can see players that weren't there a couple of years ago. Walmart, Target, and Instacart are some of the largest digital media properties in the world right now. Overall, if we look at e-commerce, which is driving this, we can see a huge concentration on the US and China, and then a long tail here. And can we see someone from EMEA, from the EMEA region in here? Well, there's one player in the top 20, not much. So a lot of the growth is coming from very, very powerful players outside, that are headquarters outside of our EMEA region. But, don't know how it's in the MENA region, but if we zoom in on Europe, we have a highly heterogeneous and rich landscape of powerful retailers, often with a higher audience reach than classic publishers, from Zalando, Otto, Tesco Supermarket, Bol.com, like the Dutch Amazon in a sense, Sainsbury's, Carrefour we mentioned, lots of different players in there who are all moving rapidly into retail media. And we counted hundreds of different players to understand, do you have a retail media offering already in Europe? And we can see, depending on the vertical, many already have. CE, consumer electronics, is leading it, followed by fashion, other sectors, supermarkets, cosmetics. DIY is still behind, but coming now rapidly. Percentage of European retailers buy with already a retail media offering available as of now. Few countries lead the way here, France and the UK ahead. We see now massive launches new in Germany, but you can see very, very different by company distribution. And we, in a sense, have new launches happening every week and every month. So now, for instance, in Germany, Schwarz Group, which owns the supermarket chain Lidl, for instance, or Kaufland, some of the largest ones in Europe, launched a new or revamped retail media offering. New things are coming all the time. A key reason to unlock this all is, of course, loyalty data, particularly if you want to combine what's happening in the store and what's happening online. Link this together. Loyalty data is like subscription data, is a very, very rich canvas of first-party data that can unlock this. With those building blocks in place, retail media offerings launched, and also providing offerings to the kind of privacy crisis in digital advertising, how are retailers currently positioned? What are they doing and how mature are they? Let's look into this. And we need to do some experiments here because there's a scarcity of data. Not many retailers are releasing how much they actually make. I saw Deliveroo drivers whizzing around here in Dubai. If you go into the Deliveroo corporate statements for the first time in 2022, they made 42 million pounds sterling in retail media. So it's tiny compared to the overall market. It's starting. But we can do some estimations, and there's a correlation here between gross merchandise value, i.e. how much money is being transacted on a retail platform, and retail media spend. So if we know gross merchandise value, and we can see retail media offering yes or no, what kind of retail media formats do they have, how mature do we think is the offering, we can put companies in buckets of conservative, likely, and aggressive, and to start to map out how much they probably are going to make with retail media currently. And this reveals a very interesting picture for Europe, which we put on here. So the dot here is the company. We have the actually gross merchandise value, and here we have the retail media share of gross merchandise value. There's a lot of concentration in this nascent bucket here. So retail media ad spend, or revenue in this case, now up to 2% of gross merchandise value we declare as nascent. Amazon isn't on here. I think, top of my head, it's on 4.7 or something like this. If you look at a Polish player, Allegro not on here, it's 9%. Instacart now it's 13%. We'll come to why that is the case. And there's a few outliers here in the US, but this is the important zone here, in here. When you look at company reports, interviews, most retailers say we have a landing zone. We know where we want to go. In 4 years' time, we want to generate around 3% of online GMV retail media. That's the target. Meaning retail media must grow faster than overall e-commerce. And of course, Amazon is a massive player in this, but it's not the only player. So when we slice and dice things, we think it's a lot of other players. So we can see growth in retail media because of an Amazon, of a Carrefour, of a Zalando, etc. In retail media is growing faster than total digital advertising, just because of this targeting rich environment that retail media can provide. Not just short-term, but long-term. And it leads to a transformation of the digital ads ecosystem, where we think retail media is going to grow faster, even more than twice as fast as video, faster than kind of the rest of search. This is just the kind of non-product-based search. And also we see in some markets a stagnation of social as it kind of is saturating in the European market. We believe that the European retail media market is going to grow to 25 billion euros by 2026. This isn't just the Carrefours, this includes Amazon, this includes eBay, etc. It's a broader definition. But the remarkable thing is that we are fairly accurate on this because there are some publicly released numbers for 2021 and we can extrapolate. That's a large number, of course, so let's put this into a little bit of context. Right? Retail media in 2021, retail media in 2026. How big is that? 2021, this market that lacks definitions and measurement is already worth as much as the newspaper print industry. Not the digital properties of newspaper, the printed stuff. Right? And in 2026, if we remove online video from what broadcasters are making, it's going to be as large as television. And I mentioned previously in my presentation that long symbiotic relationship of mass media and mass brands. And we can already see here, new relationship, maybe the one of the 21st century, is being forged just right here. And I'm not the only one with a fairly bullish forecast here. I was very pleased to see that a couple of weeks later, we saw the Publicis CEO say something quite similar. CPG companies will spend more on retail media than on linear TV by 2025. It's major growth. And I think it's a historic moment because the real comparison shouldn't be TV. I think the real comparison should be search. Because both retail media and search are what you could call crisis kids. They really grew up and proved their worth in times of market crisis. Right? So times since year zero, we see search and retail media. And to me, everybody had their year zero. For search, it was the Lehman crash, September 2008, where we saw suddenly a massive shift to search from a formerly very display-based digital ad ecosystems. Switch on, switch off, performance, reach customers quickly. And for retail media, it was COVID. Same year zero, where we saw retailers digitizing, e-commerce was coming, we needed new measurement, new data was coming here. And we believe that retail media is going to outperform, in a more mature market now, outperform search from its own year zero. I mentioned Amazon a lot of times, but it's important to stress growth is coming from a lot of different players. Because the distribution of Amazon in this, which skews the picture, actually varies a lot by market, as you can see. So there's a lot of growth coming from endemic retailers in Europe, from endemic e-com players, etc. The market overall is less mature than in the US. So here we look at, for a couple of European markets, retail media advertising revenue as a share of total e-commerce revenue in that market. The US stands bang at 4.7%, kind of the Amazon share, and you see a big distribution in Europe. It kind of varies. Germany, large population, scale effects, large endemic retailers. Although they were late to the party, quite strong in terms of revenue. The UK following suit. Spain came very suddenly. Poland and the Netherlands with strong endemic players. And then despite Carrefour being so large in France, overall e-commerce penetration is lagging behind a little bit, and that puts a damper on the total retail media market. The market fortunes, though, can shift extremely quickly. We know retailers work with tech providers, with Criteo, with citrus ads, etc. And they, in a sense, act as gatekeepers to retailer inventory. And something interesting happened, for instance, when there was a JV between Carrefour and Publicis. Suddenly, the addressable market changed a lot. There are pros and cons to this, and we try to model this, because previously Criteo had the deal, then it kind of shifted away to citrus. So market gatekeeper functions in this can change quite quickly. This poses a lot of challenges on how you buy actual retail media. What does it mean when an agency group also controls a retail media tech provider, although they are kept separate right now? Huge challenges on how you actually access this inventory. We think that, and Luma Partners says the same, we see a lot of partnerships happening right now to diversify things. Amazon Pinterest partnership, for instance, Criteo Shopify to bring retail media to smaller stores, to tap into the long tail. Maybe it could be some kind of Google AdWords play of retail media in the future. And also the Trade Desk doing a lot of partnerships, for instance, also with Ocado, a large supermarket chain in the UK, to actually upload their first-party data in there. When we speak about retail media today, the most money is being made on-site, i.e. retailers selling sponsored ads, listings on their page. But there's going to be limits to that growth, right? Retailer audiences are not growing that much after the pandemic. There's only so much ad load you can do. CPMs are incredibly high. They have to come down, not up. Some retailers in Europe are charging a 45 euro CPM for a little banner ad for a product, highly unsustainable. And there's a really interesting battle going on between advertising teams and e-commerce teams. As e-commerce teams want to keep the sanctity, the cleanness of their recommendation algorithm and not have it tainted by advertising, and the advertising people say, well, advertising is extremely relevant, we should include it. So lots of things that retailers have to work through on-site. So what we think is actually a lot is going to happen off-site. So here you can see on-site versus off-site. Off-site means retailer data being used to fuel ad spend and targeting on other properties, in search, in programmatic, but also on TV. Retailers do that partly themselves, partly with agencies, partly with tech providers. And you can see a lot of interesting things happening. So Tesco and Boots, pharmacy, supermarket, partnered with the largest broadcaster in the UK, ITV, to bring their customer data to target in connected television. So you can use suddenly retail media data in the top of the funnel. Otto, the largest retailer or e-com player in Germany, the endemic one, they've built their own SSP. It's the 5th largest SSP in Germany, integrated on all different publishers. So now they have their own infrastructure to do off-site. And a couple of reasons behind off-site, right? They need new capabilities, the retailers, they're building new DSPs, as I mentioned, but also we're increasingly clean room services, think of InfoSum, LiveRam, and others to kind of match this data. And we think these three enablers here are going to push forward the off-site opportunity, which isn't limited in inventory. Another thing is happening. The physical store. We all talk about omni-channel marketing, and the physical store becomes increasingly important in the whole overall retail media conversation because we have massive audiences in these stores. This is the revenues, total revenues in billions of euros for some of the major European retailers. But look at what tiny percentage online sales make for those where we have the data. There's a massively rich audience offline. So you could either target people online to drive to store offline, or actually through loyalty programs have them to make repeat purchases online. And Criteo recently bought a company called Brand Crush, now which does offline retail media to link these things together. So this is where we're coming to. Why are retailers doing all this stuff? What's happening? I think there's the hunt for profitability. Retailing is a pretty tough business. If you're selling a banana, your margins are extremely thin. When you're selling advertising, they're often quite frothy. So here's a ranking. We have top, I think, 200 or so retailers globally, and we look at their profit margins. This is luxury, Kering, Richemont, LVMH, etc. If you exclude luxury, the average profit margin is 3.8%. The profit margin for retail media on-site is 80%. We think the average Amazon profit margin is around 67%, and the retail media off-site margin, despite all the tech costs, is 40%. So the Walmart CEO recently said on a conference call, in the history of the company, he's never seen a business with a profit margin as high as that of advertising. And of course, the online delivery stuff, building online stores, costs a lot of money. So retail media often isn't just a nice to have, because it's so profitable, it fuels and funds the wider digitization efforts that retailers have to go through. And it's related. There was an interesting meeting at Amazon in 2007, which is in a fantastic book called Amazon Unbound. where Jeff Bezos was asking his executive team, well, I wonder really what profitability was without advertising. The executives didn't have the data ready. They had to scramble and look through it. And they realized, well, not at all, actually. So you could see that if you separate business lines, advertising drove the profitability. It wasn't the selling of stuff. And this has actually increased if we look at the data. This is even crazier if we look at the last mile delivery business. Getir, Gorillas are merging now, Flink, Kajoo, etc., all got massive venture funding. And there's this meme going on here, got super fast delivery, but you have a positive contribution margin. Huh? Yes? Yes? No? Well, often not. Often this stuff is not profitable. You're losing money on the orders, which is why Instacart now makes 82% of revenue from ads, because it's the ads that drive Instacart to profitability. So this is very interesting. Advertising, to repeat, it isn't an add-on business model. It isn't an extension of a business line. It is the stuff that makes the core business possible in the first place. What's happening in the future is not all frothy. This market lacks definitions and standards, as I mentioned, and advertisers are demanding more. We did a survey at IAB Europe. We asked a lot of CPG advertisers, 21, what they want from retail media. Clearly they want buying, but there's other stuff, insights. I mentioned previously how detached they are from their own first-party data. They don't have it. They need to understand their customers, what they want to buy, what they buy in combination, what kind of basket value they have, and retail media can provide that solution. But retailers want something else. They don't just want Excel reports on media performance, or advertisers. They want more. They want access to the transaction data. And many retailers currently don't do that. So retail media needs to move here to do this. Also demonstrate return on ad spend. And many are asking, is ROAS even the right metric for this, or should we define it differently? So this is something that retailers have to go through as well to ensure that budgets are really coming to them. If this is the case, in particular for e-commerce businesses, retail media can be hugely profitable. And I'll show you here. So this is a waterfall chart for an e-com business. From sales, what is the cost of goods sold, then I have the bucket here, SG&A, where advertising is in there, so variable expenses, the shipment, fulfillment, and a fairly thin margin. The interesting thing is that this bucket SG&A, which advertising in here, is highly variable. So if you can target your ads better, measure them better, and attribute sales to it, you can actually increase your margin and actually make the entire e-commerce business model more profitable. This is why many e-com brands look to retail media in order to buy ads there. And I think we need to widen the market further, because we speak about media, but increasingly in the digital world, the markets of media, marketing, rent, and fulfillment are coming together. Advertising is a digital storefront as well. And we as marketers have always asked this question here. What does it cost to get the message to the consumer? But the COO has asked a very different question. Has asked, what does it actually cost to get this stuff to the consumer? And we see some first developments where these worlds are combining, where retailers like Carrefour are using programmatic ads to make special product recommendations to people who live close to a fulfillment center or where the cost of delivery is smaller. Meaning the world of advertising and the world of logistics are coming together. I think that's quite exciting because it shows that advertising, again, isn't an appendix to the business, but can be a structural ingredient of it. But we need to act, because if people buy retail media ads, they often forget that people might buy the stuff anyways without the ads. And we're seeing right now a lot of brand budgets being put into retail media, into kind of what some call a performance sinkhole, right? So budget moves away from brand and it's being put on ads where people click on while they would have bought the product anyways. So we need to change that. That's a huge risk. We can also see this hyper-fragmentation in the market. Everyone and their mother is launching a retail media network. We can see 89 of those in Europe. That's more than tier 1 or tier 2 publishers, and more are launching all the time. How do you orchestrate this? If you're an advertiser, 89 different networks, all with different measurement, different definitions of ROAS, different ad units. How do you do this? You have to pick, you have to orchestrate. Standards are crucial, and consolidation among retailers is inevitable, because not everybody here has a data science team, has the ability to really deliver the quality of the product that retailers want, that advertisers want. So there has to be M&A. And also we need to solve other things. We did another survey here and we said retail media is completely disjointed, no integration with advertising buying systems, lack of data. It's really costly to audit the retailers, figure out which one to work with and so forth. So in 2023, we must get ahead of the fragmentation, of this fragmentation, and really solve the lack of interoperability. I think we need to expand as retailers the pool of advertisers that they rely on often, for a cosmetics brand, L'Oreal and others are more than 50% of revenue. Programmatic on-site is in its infancy. Publishers, retailers are often not publishers, they don't have ad ops teams, etc. So they don't really know about programmatic. Huge opportunity for consultants, by the way. Some advertisers are, in a sense, through their trade deals, forced to buy retail media without really wanting to. And also, advertisers really want to combine the on and the off-site stuff and the online and the offline stuff. More work needs to be done here. And also, it's unclear who buys this stuff in an agency, who's responsible, and how can we overcome competition and ownership issues between trade marketing and others. And lastly, going solo and other things doesn't always work. Here is a thing, here, top 1,000 e-commerce players in Germany. They all want retail media networks, most of them, but 40% of revenue is on the top 10. So they can play in the retail media space. If you're in the middle here, you probably need to be category leader in beauty, in DIY, and probably in here, we're going to see this here. My idea, prediction is there's going to be a lot of kind of long-tail retail media, so in Google AdWords for retail media, that's going to be powered purely third party. That's the state of the market right now. What's the potential for MENA? Very different question. And I think just recently here, the Economic Zone Dubai released some data on total e-commerce spend in the MENA region. I don't know how good this data is, but it's some that I could find. And we can see of this, they give this subset of markets here, which are relevant for IAB MENA, with around 26 billion e-com revenue in 2026. If we do a little thought exercise and say, we take those 26 billion, and we look at European maturity. Here we have, the least mature markets in Europe, 50% of current European maturity, where they want to be in 3 years. And we apply this share, right, retail media as share of e-commerce revenue, to the 2026 value of 26. The MENA market is probably going to be in that kind of range somewhere. Broad line estimate, but I hope it gives some indication this is going to be a market that is likely going to be worth hundreds of millions of dollars in the years to come. And hopefully we can integrate it at some point in our ad spend study. With this, I hope I could give you an overview of what this market is and how it looks like. Thank you very much.